Three-stock lunch, Goldman Sachs, NVIDIA, Toll Brothers.
Goldman to buy. Let's ask CEO David Traynor. David, welcome to you. And what do you think about the stock here?
Hi, Kelly. Yeah, Goldman Sachs is one of our favorite financials. Has been for a long time. Look, having been in Wall Street myself, Goldman was always the top of the pecking order. And their returns on capital, the return on equity, their profits have reflected that. And we continue to be constructive on this stock. We think it makes a lot of money, huge cash flow, and it's still relatively cheap.
Yeah, but my pushback against all the financials, Goldman Sachs, JP Morgan, all these guys, is if we are late cycle, which there's debate if we're a late cycle or medium cycle or still early cycle, right? If we're late cycle, these stocks are not to play, man. They're going to get destroyed over the next 2 years if we're actually late stage cycle, right? So that's just something, food for thought. Like, it'll be 2 years of a downdraft for a lot of these sorts of financials if we're truly late cycle here.
Let's move on to another one that has huge cash flow, makes a lot of money, and may or may not be relatively cheap. That would be NVIDIA. Its CEO Jensen Huang weighing in on the strong demand and supply shortage for NVIDIA's latest generation of chips, saying the scramble for his company's products has frustrated customers and raised tensions.
Demand is so great that delivery of our components and our technology and our infrastructure and software is really emotional for people because it directly affects their revenues, it directly affects their competitiveness. And so we probably have more emotional customers today and deservedly so. And you know, if we could fulfill everybody's needs, then the emotion would go away. But it's very emotional. It's really tense. We've got a lot of responsibility on our shoulder, and we're trying to do the best we can.
That sounds like a question, an observation that demand is outstripping their ability to supply. Is that a problem or an opportunity?
I think it's a little bit of both. I mean, there's an enormous amount of capital being allocated into the AI and the semiconductor space for this reason. And look, NVIDIA is a great company. High returns on capital. I mean, like 10 times what even Goldman Sachs is. I think NVIDIA is around 195%. But the expectations baked in the stock price have more than that baked in. I mean, when we run the numbers in our reverse discounted cash flow model, we just did a big case study on NVIDIA because it's a poster child for good company, bad stock. The stock price implies that the profit's going to be something in like 10 times bigger than Apple and Microsoft combined today. And the revenues will be bigger than the GDP of the UK. So, you know, we're talking about a stock that has all that good news priced into it. This is not new news. I mean, NVIDIA has become a very crowded and popular trade. I don't think investors should be surprised to think that, oh, maybe all the good news is priced in. And as a result, we called the top in the stock a couple of weeks ago. And so far, that's turned out to be a really good call. We think on the margin, this stock has got a lot more downside risk.
So that's a sell.
Yes.
All right.
It's almost a short, but I don't know if you would dare with a name like NVIDIA. Let's move along to Toll Brothers, David, which is on the decline today, actually, even with what's happened with this drop in mortgage rates. CEO Doug Yearley was weighing in on that. And
short? No, heck no. To short NVIDIA, crazy talk. Now, on the flip side, let's say the stock does have a blow-off top at the end of the year. Let's say we go back risk on market. Let's say there's a scenario where Q4 numbers are great plus a blowout guidance, right? And everybody just goes 100% like full on, like NVIDIA, like got to be on the stock. Then going into 25, then you could maybe potentially look at some puts if you're assuming that, you know, 2026 numbers will be troubled, right? So I don't know, like that's a potential, but shorting, like, come on, man, there's better options out there.
it will have on housing affordability.
The builders have done so well with high rates, which no one thought they'd do.
Yes,
We've been sitting on 7 to 8% rates now for the last 2 years. And finally, they're in the low sixes with a feeling that they're going to get lower. And that's when the builders sell more houses because the affordability, all changes.
I wonder.
So everybody, he's like, you know, everybody assumed home builders were going to be screwed over the last couple of years. And he's 100% right. Everybody did, right? They weren't. Now everybody assumes home builders are going to be great for the next few years. Maybe they won't. Maybe people are going to be wrong again in regards to this, right? Remember, rates come down and unemployment picks up, you're going to have housing inventory pick up substantially. The more inventory that piles up in different markets, the more you'll end up having price compression. If home builders their numbers start getting hit, right? They're going to have to start trying to grab market share. When home builders start to try to grab market share, whether it's because of competing other home builders or whether it's because they're competing against existing homes, margins start to get hit, right? Margins start to get hit, it's a whole mess. So, like, I think people are in danger if they just assume that home builders are like the play for the next couple of years. Like, maybe they are, but people just got this very wrong. Like, I don't know one person. I don't know if we go back to 2022. I don't know one person, including the home builders themselves. If we went back to mid 2022, right? Let's go back a little over 2 years ago. That thought home builders were going to do phenomenal in the next 2 years. I don't know one person, including the CEOs of these home builders. And their business has been great, right? So who's to say we're not going to be wrong on the other side? That's just a little food for thought in regards to that.
Takes away their competitive edge, though, David. I mean, they've been doing buy downs. They've been able to be more competitive and you know, kind of entice the buyer in a way that the existing inventory could not. Maybe their competition heats up now. What would you do with the stock?
We like the stock. This is a buy-rated stock, and we've been really constructive on a bunch of home builders for a while. D.R. Horton's been one of our top focus list performers for a long time. NVR is one. I think Kelly and you and I talked about that one a long time ago. And, you know, look, the supply-demand outlook for these businesses is really strong. There's too little supply, and we need to build more homes. And the best builders, the really profitable companies, we think continue to be in a position to see continued profit growth, and their stocks are priced as if there will be no profit growth. Like, for example, with Toll Brothers, you're getting a free option on growth. The current stock price implies, right, the opposite kind of an NVIDIA. With NVIDIA's stock price implies all this huge amount of growth. Toll Brothers implies zero profit growth from current levels. So we like the fact that it's profitable. It's seen great profit growth, yet the valuation implies there will be no profit growth. So that's good risk reward for us. We like that in this environment. And it's really getting increasingly difficult to find stocks we like in this good environment. I know Tyler always gives me a hard time because it's always sell, sell, sell. We did 2 out of 3 today, and we're glad that Toll Brothers made the list.
All right.
Yeah, Toll Brothers, one of those stocks, it looks cheap, right? You pull it up on 1000xstocks.com, you look at the valuation, like, dang, cheap stock, man. Great company, so well run. It was such a cheap stock. But the thing you got to factor in here is if we're late cycle on the housing cycle, right, which is a real possibility, keep in mind the housing market's been nothing but really up for how many years now? I mean, the housing market bottomed around 2010, 2011 in most markets, and here we are in 2014, about to go into 2015. The housing market's basically been in a massive uptrend for about 14, 15 years straight. Like, what if we do have a housing recession? And when I say housing recession, I'm talking about a home building housing recession, right? From, let's say, 2026 to 2028. Then you're going through 3 years of these home builders' numbers just going down and down and down and down and down. And just ugly, right? That would not be good. Doesn't mean that's going to happen, but that's why these sorts of stocks can't command huge PEs on them, because people understand that level of risk. And, you know, a stock like Toll would get cut in half way before the 3 years would go. Like, Toll would be cut in half in the first year of that, right? So let's say 2025 is moving along and the economy is getting worse. Let's say the labor market's getting worse, right? Unemployment rate keeps going up. Let's say Toll Brothers guidance isn't that good as we get to the back half of 2025 or something like that. The stock would get cut in half way before that. It'd go from 140 to $70, right? And then people might think it's a deal, and then it might go from 70 to 35, which is where it was prior to Rona, right? So it gets another 50% cut off that. So I don't know, just things to consider. Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. The stock that ultimately comes back to the most regret, the most toxic stock is NVIDIA for me. This is a stock I owned a long time ago, made a bunch of little money on it, sold out. Since that time, the stock 10x'd or more. I should have held every share I had of NVIDIA back in the day. And then over the past year or so, bought a bunch of NVIDIA shares, made a bunch of short-term money, and guess what I did? I ended up selling everything. I sold it all. And I got, these are the shares in the public account I had, which was, a decent-sized position for me. I made over $11,000. And here I am in a situation now. I have no NVIDIA shares, and all I keep thinking about is, I want to own NVIDIA. I want to own NVIDIA. I want to own NVIDIA. And I'm scared I made a big mistake in regards to this one. This one's about to do a rocket ship ride at 200. Okay. So I want to explain where this regret's coming from, what's going on here, what I'm seeing out there that's really freaking me out in terms of kind of just considering like I'm probably screwed up again and I sold NVIDIA way too soon and there's probably a lot to go here. So we're going to cover all those things in this video and show you some of the stuff I'm looking at recently that I'm like, maybe I've made a big mistake here, okay? So, NVIDIA, I'm freaked out, okay? I got to be completely honest with you guys. I made a mistake here because there's 2 universes in which NVIDIA operates, okay? There's Universe 1. Universe 1 is essentially a situation where NVIDIA's best revenue and net income days are in 2024 and 2025, and that's it for them. That's going to be their all-time records. They'll never do better than that. You'll never see better revenues, net incomes, margins, anything like that past 2025, right? And that's a universe I think a lot of people are kind of thinking and operating in, right? They kind of think like this is a super hype cycle in regards to these products. The demand's insane. NVIDIA's able to command these huge price points. And it's never going to be as good as it is right now for the company. And so they see, after 2025, revenues going down, net income going down, margins going down, right? And like the peak, they're already peaked. Like the peak will have already been done at that point in time, right? And that's a universe you could certainly operate in. Then there's a second universe, okay? This universe is NVIDIA's revenue growth slows big time after 2025, right? But the company keeps growing. It keeps the revenues going up over time, the earnings per share, the net income. They keep coming out with game-changing products and services as they've done for the past 30 years now at this point in time, right? And the company grows bigger and bigger and more dominant, and they end up becoming a $5 trillion, $10 trillion company, right? Instead of a $2 or a $3 trillion company. So this is a universe some other people operate in, right? Where they believe that NVIDIA has still a long way of growth, right? Now, let me ask you this question. I think this is always a good way of framing it, right? Because I think a lot of people, it's easier to go over to this side. I will be completely honest with you. But if you were to bet your life on it, right? Which one of these 2 universes do you think is the reality? If you had to bet your life on it, do you think NVIDIA's best days are really 2024 and 2025, and from there their revenues and net incomes go down over time and they never reach those peaks again? Or would you say it's more probable that NVIDIA's revenues continue to grow after 2025, right? The company keeps growing. They keep coming out with great products and services, right? It's not the end of NVIDIA after 2025. I mean, if you had to bet your life on it, I bet you even the bears would choose this over here. I bet you they would. It's very easy to just throw out kind of doomsday for a company, but if you kind of thought about what if my life was dependent upon it, I think you start to think different. You're like, could I really bet my life against NVIDIA? I don't know about that, right? You start to think a little bit different, and I bet you the far majority of people would choose this over here. I bet you any money, even the bears would say, you know what? Yeah, I said that. But you know what? I'm choosing this over here. I want to live, right? Now, you also got to ask yourself, Jensen, with all this man's done, would he let this universe play out? Or excuse me, this universe 1, would he let this play out where NVIDIA peaks and they never do better than that, right? I don't know. I think he's a hard person to bet against, right? Ask anybody to try to bet against him, and it's ultimately not been very well. You might be able to bet on a short-term time frame, like for a 6-month span on the stock or a 12-month span or something like that. But ultimately, you can't bet against this guy long-term. He's like an Elon Musk type fellow that everybody who tries to doubt him, they just always end up on the wrong side of it, right? You can't do it. Like there's very special people. There's very special business people. They're very specially talented, and some of them are just the creme de la creme, and Jensen's definitely that creme de la creme, right? Additionally, look at this. This is over the past 20 years. This is looking at NVIDIA stock over the past 20 years. I bet you 99.99% of investors have never looked at NVIDIA's 20-year track record in regards to their stock price. They might have looked at a 20-year stock chart, but when you really look at like this, it really starts to put some things into context. First thing, in the past 20 years, there's only been 4 down years for NVIDIA stock. 3 of those down years, guess what? They were single digit down. So the stock was down, but it was like hardly down, right? Single digits is like nothing. And of the past 20 years, 2 decades, only 1 year did the stock fall double digits. 1 year out of 20. And you think about everything that transpired in the past 20 years. The great financial crisis and all the mess that came with that. Rona, the late 2018 stock market crash, the chip cycles that would be booming and then busting and booming and busting. You think about all that. And NVIDIA on that 20-year span only has 1 double-digit down year in that entire time. That speaks volumes about really how great this company is. But the next part, I think, speaks even bigger volumes. 13 of the past 20 years had double-digit growth in the stock price. Double-digit, 13 of 20 years. That's ridiculous. That might be one of the best. If you look at all stocks the past 20 years, I don't know if I could think of another stock that was up 13 of the past 20 years, double digits. That's special. So when you look at it from that context, keep in mind, just because a company's done certain things in the past does not guarantee they're going to do things in the future. But when a company has a very special employee force and a very special CEO with products and services that continue to impress more and more, and you really think about NVIDIA over the past 20 years, the company's gotten better and better and better and specialer, right? More special, we could say. Ooh, that's a pretty tough company to say, you know, and I don't want a piece of that, right? Then we could think about the moat. Warren Buffett always talks about the moat around a business, right? And damn it, you look at NVIDIA, I have to say, the moat around NVIDIA is by far and away better than it's ever been in NVIDIA's history. Because of CUDA, because of their software platform, along with the hardware platform, and along with the entire way they put chips together to make data centers. I mean, everything across the board, I gotta say. And then you look at the chips themselves, how impressive they are. Look at the new Blackwell chip. I mean, at the end of the day, I gotta say, NVIDIA's moat is not just better than it's ever been, it's a lot better than it's ever been, right? And that matters for a business substantially. It's the best it's ever been, right? Now, I like to kind of think, well, could we poke holes in the story, right? For something like NVIDIA. Okay, we got all this going for us. Yeah, the stock's been amazing. Yeah, the products are top tier, all these sorts of things. But could I poke a hole somewhere in here? I tried. I really, really did try, right? And I thought about Taiwan. We know the far majority of NVIDIA's chips are, guess where? They're made in Taiwan. And we do know there's something that's kind of been brewing here, right? We don't know how that is going to happen, but what if it did happen, right? What if these guys come on over here and we have a whole situation? Well, that could definitely mess up NVIDIA's numbers in the short term, right? If there was a major disruption in the chip cycle in terms of the production, that could be bad. But I got to be honest with you guys, even that one's a hard one to poke holes through. Yeah, it could cause disruption in the short term, but you got to understand, for the past several years in the United States of America, we've been building out massive semiconductor facilities. This is a TSMC insane campus they've been building in Arizona. This is probably 15 minutes or so away from a rental house I have in Arizona. Not only that, in Chandler, Intel's been building a massive $20 billion plant as well, right? And so you got to keep in mind, like the infrastructure is all being put in place that if this does happen, like in the US, we're ready to rock and roll when it comes to producing these chips. And there's a big question if that's ever even going to happen. But if it does, sure, it could disrupt supply chains and stuff in the short term. But honestly, it's looking pretty dang good. Like things are set up very well. So that's a hard one to even poke a hole at to really hurt numbers for years. It's like maybe that could hurt numbers in the short term, right? Maybe NVIDIA would get even more pricing power, by the way, in regards to that situation. Completely random side note. I did just want to show you guys this because I thought it was interesting. This is in regards to TSMC facility they're building in Arizona, right? Which is like ridiculous. The American engineers complained of rigid counterproductive hierarchies of the company, talking about TSMC, the Taiwanese company. TSMC veterans described American counterparts as lacking the kind of dedication and obedience they believe is the foundation of their company's world-leading success, right? So the Taiwanese are basically saying, y'all a bunch of lazy bums in America, and the American engineers are saying, you guys do business kind of dumb. Like, you guys don't have your businesses set up the best, right? So, I don't know, maybe there's some truth in both those sides, but it's just interesting to see the culture clash that's going on between TSMC and, American workers and those sorts of things. Completely random side note. It really has nothing to do with this video much, but I just thought it was interesting to show that, right? Now, not only is it in Arizona, it's not like in Arizona is the only place they're building out semiconductor facilities right now. It's actually happening all over the United States of America. And these are all getting built. Some of them are ready to rock and roll this year. Some of them are going to be next year. Some of them are going to be 2026. So the moral of the story is in regards to if this does transpire, messes up things a little bit in the short term for maybe 6 months, 12 months. But honestly, it's been very de-risked now at this point in time because all these facilities getting ready to be up and running now or over the next couple years here, right? Now, additionally, this freaked me out big time in regards to thinking, man, maybe I just sold this one too soon, right? Larry Ellison, the Oracle, the big dog at Oracle, right? One of the richest people in the world, one of the most powerful people in the world. He said that he went to dinner. It was him, Elon Musk, and Jensen. They went to Nobu in Palo Alto, and he bragged that he picked up the bill, okay? Listen, he said the dinner was basically just him and Elon Musk begging Jensen to take their money and give them more chips. That's what the dinner consisted of, right? That freaks me out a little bit. That makes me say, damn, I think I might have sold this one too soon here. I think I might have took profits early again in regards to this for the second time, right? What do these guys all have in common? Elon Musk, Jeff Bezos, Larry Ellison, Mark Zuckerberg. Other than they're just all ridiculously rich with these insane net worths, right? What do these guys all have in common? Bill Gates, Larry Page, Sergey Brin, Steve Ballmer. They all have something in common outside of being insanely rich. And it's the fact that these guys' companies, Tesla, right, and obviously Elon Musk, AI side as well, Amazon, Oracle, Meta, Microsoft, Google, guess what? They're all begging number 14 to take their money. Begging him. Not like, can we get some chips? No, like on their knees, begging the man for chips. Begging. These are the most powerful men in the world. These are the richest people in the world with the most powerful companies in the world. And they're begging this guy to take their money. You know how special your product's got to be for these sorts of individuals to be like, please, daddy, take our money. We need what you got. You're the best, right? That's damn special. That's special. When you can have the most powerful men in the world get on their knees and beg for your product. That's something that makes me say, I don't know, like NVIDIA's probably a pretty special company, right? Now, we've seen this before in American history. We've seen this before, actually. You know where we saw it before? Right here, Rockefeller. Rockefeller was an individual in which he had what the world really wanted. He had what all these other business titans wanted. He had the oil. And the oil was very special back in those days. You know, now we look at it just as another random commodity, right? Big deal. Back in those days, oil was Very, very special. And Mr. Oil's net worth went to ridiculous levels. They're saying Rockefeller's estimated $1.4 billion net worth in 1937 was equivalent to 1.5% of the United States GDP. Of the United States GDP was his net worth, right? I did some math on this. So this would be equivalent of somebody being worth $405 billion here today. We don't even have anybody remotely close to worth $405 billion here today, right? But that goes to show you, like, when you have somebody that's really like special like this and they have such a in-need product that all the other most powerful people in the world want that product. And I can tell you, back in those days, all the other most powerful people in the world, they all wanted what Mr. Rockefeller had at that particular time, right? And so I'm looking at this Jensen situation, and it reminds me a lot of kind of studying back at that time period and what Rockefeller had there. It was unbelievable, right? So yeah, I think that speaks volumes, because I've never seen this before. We've never seen this in modern times, where the most powerful people in the world were begging a CEO to give them a certain product, right? We've never really seen that. This is new. This is like special, right? Now, here's the deal. You look at NVIDIA's valuation, right? And you can't say the stock's expensive. The stock price went up a lot, but just because the stock price goes up a lot doesn't mean it's expensive. You have to look at, like, well, how much actual net income, how much in earnings per share is a company producing and likely going to produce in the future. And when you look at NVIDIA, it's a hard stock to say it's actually expensive. It's trading at a 55 trillion PE. Okay, the market trades at what, 20-ish, somewhere in the 20s, right? Okay, NVIDIA is like growing so much more substantially than the average stock in the stock market. And not only that, they're arguably the most powerful company in the entire world. They're no average stock. They're no average company. So NVIDIA should command a ridiculously high valuation compared to peers, or not even peers. I guess there really is no peer for NVIDIA, than really anybody else in the stock market. Look at a forward P, 48. Okay, a little over 2x maybe the market. Big deal. Look at the growth rates. They're not even on the same stratosphere. 2-year forward P on NVIDIA, 33. Trailing 12-month earnings per share growth, 407%. Current year expected earnings per share growth, 230%. And next year is the big slowdown, right? Which it is a big slowdown, but they're still expected to do 34% earnings per share growth. And a lot of companies out there are happy to do like 8%, 10%. Never mind, 34%? Next year, revenue growth expected 34%, when most stocks, many stocks in the stock market are trying to do 5%. So let's get this right. NVIDIA is basically growing revenue by about 7x, 6x or 7x, kind of an average stock. But yet their 2-year forward P is only maybe not even 2x above an average stock, or around a 2x, right? And then you also got to take into account the fact that this is arguably the most special company in the world, just to be honest, right? And then you start to say, dang, man, maybe, just maybe, the stock's not expensive. Maybe it's actually cheap. And if we look, right, I wanted to compare them against two other stocks that get talked about quite a bit, right? Palantir and Tesla. Compare to Palantir and Tesla. Though Palantir and Tesla are two stocks I own. 2-year forward P on Palantir, 85. We'll see if that comes true, by the way. They might be more profitable than they have there. But let's say even Palantir, let's say Palantir is quite a bit more profitable. So let's say 2-year forward P is 70. Okay. NVIDIA's 33. And keep in mind, NVIDIA might beat those numbers, right? Tesla's 54. So at the end of the day, if you compare NVIDIA versus Tesla and Palantir, it's just pretty clear that NVIDIA looks like the steal deal of that bunch, right? Additionally, look at the trailing 12-month revenue. NVIDIA's smacking them. Current year expected earnings per share growth. NVIDIA's smacking them. Next year, revenue growth expected. NVIDIA's smacking them. So even I look at something like this and I'm like, okay, I own these two stocks and I love them, but NVIDIA honestly looks cheaper than both those stocks. So it's hard for me not to want to own this baby. When at the end of the day, the numbers are what the numbers are. No, here's the deal. 1 month ago, I will say, when I sold those shares, I was like, I feel good about this. I made a bunch of money. I feel good. I feel content, right? And I would say probably under a 10% probability I would have bought the shares back. Today, as I sit here in this chair, I would say it's like a 50-50 if I'm going to buy NVIDIA stock back. It's a 50-50 now at this point in time because of everything I'm looking at. And when I'm just like, it's ridiculous, man. Like, how can I say no to a company when the stock doesn't actually trade expensive, when you got the most powerful men in the world begging this guy for more, more, and when the company's proven that they can just come out with next game-changing product, and I'm like, who's going to say it just stops now? Like who's going to say NVIDIA just stops producing like great products and services, right? And then when you don't really have a direct competitor, the more I study on the industry, the more I'm like, they don't. Intel's not a really direct competitor. Broadcom's not really a direct competitor. AMD's not even really a direct competitor. And so I'm like, ooh, that's tough. That's tough, right? Now, it's interesting because Apple, if you ever kept track of Apple stock over time, there was always a great saying in regards to Apple. It's own it, don't trade it, right? And that's always kind of been the Apple way. NVIDIA's been different over time. NVIDIA's kind of been more of a stock like, you could trade it, right? Because these goes through these big chip cycles up and down. And, one moment NVIDIA stock's booming and it's up 100%. Next moment it's down big, 30, 50%. But at the end of the day, those drops in the stock are not nearly as much as people think. It's only had, in the past 20 years, it's only had 1 year where the stock fell, double digits, 1 year. So even that saying about, well, NVIDIA goes through these chip cycles that are boom and bust, sure, but the stock really doesn't. It really doesn't. 1 year and 20 years where you were down double digit, and that double digit drop, by the way, was lame. Let's go back here. How much was that double digit drop? 16%? That's the worst. That's the worst NVIDIA did in 20 years. And that was in the great financial crisis, 2008. Oh my gosh, the stock fell 16%? And that's the worst you have to show? Oh my gosh, right? That's pretty damn impressive there. It's pretty damn impressive. So NVIDIA ultimately, it might start to move into a category of own it, don't trade it. And if it starts to move into this category over the next year or two of own it, don't trade it, it will command higher P ratios, as Apple does nowadays. And if their services side of their business, right, their software business continues to build out, the revenue's there, guess what? It's going to become an own and don't trade it stock, which will command higher valuations, right?